Great. Fantastic. Just making sure we're good. Looks like we are. And good to go. Let's go ahead and check this out real quick. Just want to confirm. And then we'll jump into it. Okay, good. I am. Sweet. I want to make sure that we dive into just about everything we need to dive into today. I'm going to keep everything up here. I'll have like a little screen over to the side that I'm kind of looking at as we go through the slides. But other than that, we're going to kind of dive in and launch it. And so excited for everybody here. Thanks so much for being here today. And I might give it a minute. Nah, I'll just go. So if people aren't here, then that's okay. I'm just going to, what do you call it? Business as usual. Let's get it. Okay, cool. So today we're going to dive into how to find your target investor. I think it's really important to understand who your targeted investor is and then be able to attract them, because really, unless you know who your target investor is, then you don't know how to attract them and then even how to engage them in conversation. So we're going to talk about that today. And then we're going to talk about how to create that conversation, cultivate that conversation that leads to eventually raising $500,000 in the next 30 days. So excited for you guys as we jump into this. I'm going to go ahead and share my screen just so we can go from there, give you guys an idea. If you could, I would love to see kind of where some of you guys are from. This is live. It is, what is this? May 7th, 2025 at 8:02. I think you can actually probably see my screen in just a second, and it'll let you know then we live here. I definitely want to see where you guys are from. If you can, just put it in the chat. And what you do, if you're raising for anything right now, would love to be as helpful as I can for you. That is my goal. That is how I want to make sure that I can give as much value as I possibly can on this call today. So just let me know where you guys are from. That would be fantastic. Ooh. Sorry, I didn't know what the heck that was. Okay, cool. Let's go ahead and dive in a little bit. Let me adjust this. I don't like that. I'm going to adjust the way this looks for everybody so we can see full screen on here and it makes sense for you guys. Okay, cool. We're going to be flipping back and forth through some of these screens, but we're going to talk about how to raise $500K in 30 days, even if you don't know anyone with money, have no track record, or feel intimidated by raising capital. Some of you may not. Some of you may have a track record of raising capital, but I'm going to help you guys today. Go ahead and take that to the next level just so you can do that and do that effectively. It's either some different type of method. Of course, we talk about LinkedIn. We talk about Instagram. Those are all really great ways. And then even just in person, word of mouth. But let's go ahead and dive in. One of the big things that I want to talk about first before we really get going is this idea of like having self-limitations. I know when I first started raising capital, especially somebody like me, Black, Middle Eastern, grew up in the hood, don't really have anybody in my life that was investing into real estate, investing into anything, living paycheck by paycheck. I really thankful. I had an amazing mom. My mom was, I say true triple double mom, 3 jobs, 2 kids, worked super hard to give me the lifestyle that she really thought I deserved, but really didn't leave any sort of investments or anything for me to kind of get to that next level or even learned about that. And so I came into this with a lot of limiting beliefs. Most people think capital raising is reserved for ultra wealthy people or people on Wall Street, right? That's what you would think. You instantly think funds, capital raising, people who have good connections. Capital raising seems exclusive and inaccessible, right? That's what we think. We think, oh man, it can't be for me because I don't have access to that type of people. I'm not this type of person. I didn't work on Wall Street. I didn't work at Goldman and have these kind of connections, or I don't know people with money even. And that's a really big one. And really what ended up happening for me, and we'll talk about this as well, is there's a mindset shift. Anyone can learn this process of raising capital. It just takes with the right guidance, right? Knowing exactly what to talk to people and say to people is half the battle. That's makes it so much easier than trying to guess, stumble your way through it, and not know exactly what you're talking about. And then we'll talk about this new reality of access to funding becoming available to everyone. Once you break these limitations, that really helps you to get to a whole other side, the whole next level for you to be able to raise capital. And some of you are raising capital at a really high level, and some of you are doing great. And so my hope and my goal is to help to refine that for you. So if you're already raising capital and you're in here and you're already dialed that stuff in, I want to help you to refine your capital raising so that you can become more and more targeted. I'm actually very excited to talk through that today. I had an epiphany uh, one of the biggest epiphanies for me was Jesus. I've done a lot of Bible studies, done a lot of, I actually worked in full-time ministry for a while. And if you could sum up Jesus's ministry or his teachings, like the majority of his teachings in one word, it would be ask. He said that more than anything. He even said this thing that sticks with me all the time, and I think about it all the time. You have not because you ask not. You don't have because you're not asking. And so I think it's just really one very simple thing that we can all move to just start doing is asking. Just ask. I know it sounds very simple. And so we're going to dive into a little bit more as we get going. Like, how do we ask? How do we dive into that? Yo, Mario, good to see you, man. Hey, I'm glad that you're here. And Billy, Billy, what a fantastic dude, man. So excited you guys are here. Yeah, so this idea of just like asking, right? You have not because you ask not. And so for me, it was this mind shift of like, okay, because I'm not doing what I need to do, right? Or and we'll talk about this. It all is the foundation of it is my motivation, because ultimately, for me, I start with my why. Why am I doing what I want to do? Because, and Simon Sinek has a really good book called Start With Why. Because if I can't figure out my why, then everything else becomes sinking sand, especially if things start getting hard and people start denying me and saying no. If I don't have a strong why in which I'm doing, it'll get really easy for me to get discouraged. It would get really, really easy for me to go, you know what? Nobody believes in me. Nobody believes in what I'm doing. But when we disassociate our identity from this and we are grounded in a really good why on why we're doing something, it sets the foundation for really solid capital raising, because it helps us to continue to be persistent. There will be a lot of people that don't fit your, that don't want to invest with you, not because you don't have a good idea, you don't have a good deal, you don't have a good thesis, but honestly, we're going to talk about it today, and I'm going to show you guys how to like break down and find your perfect avatar. It's going to be because either they're not the right avatar, not the right fit, or they just, it's just timing. There's a lot of this that's timing as well. So we want to have a strong motivation and our reason why. And the reality is, raising capital is about willingness, not necessarily wealth. Really, it's going to be people that believe in you. It's going to be people that believe in the deal and have the willingness and the trust in you to be able to invest. And so really, I had to, when I first started raising capital, I had to break down these limiting beliefs that I had grown up all my life with. And some of it was like, why would anybody want to invest with me? I'm not worthy, this and that. Like, I don't know anybody with capital. My deal isn't good enough. Like, really, the mindset shift came when I realized I don't have to go out and beg people, because people are, if we break it down, people are losing money at the rate of inflation, right? So like they have their money sitting in 401ks, which, man, I'm excited because like I'm going to do this every week, guys, and I'm going to teach on different things every week. So next week, I'm probably going to teach on something about funds. The week after that, I'm probably going to teach about reaching outside of our network to raise capital. Today, we're laying the foundation, getting your avatar. And so really, once I started educating people and realizing that I have an incredible opportunity that they don't have. A lot of people are just sitting with like, oh, hey, I'm investing in the stock market, which is super volatile right now, because who the heck knows what the government's going to do. It swings every day based off of what's going on with tariffs, what's going on off of the potential war in Pakistan. All these things that are shifting are causing massive swings in the stock market, and people don't like that, especially if their 401k is tied to it. So then, like, as I start educating people and helping them to understand, hey, what are you doing with $7 trillion worth of money sitting into 401ks? And as I started letting people know about the opportunity, it became less about me going and begging for money, bartering for money, trying to be like, hey guys, I've got this really amazing deal. I promise you're gonna like it. You should pull your money out of there and bring it over to here. Like the less I had to do that, my mindset shifted. The less I had to do that, because I'm providing an opportunity that they would not normally have access to. People don't know how to go out and find deeply discounted real estate. People don't know how to go out and find good businesses, scale those businesses, and then package them with multiples so that they can sell at a much higher valuation. People don't know how to do that. People don't know how to lend money to real estate investors or other people or small businesses. People don't know how to do those things. You're providing them an amazing opportunity to put their money to work. Now, what really, really has helped me, and this is good, we can start taking notes here a little bit, is when I attached my why to their money. Because what happens is a lot of people really, really want to invest in something bigger than themselves. Once you start dealing with like high net worth individuals, accredited investors, you find that a lot of people start doing like they start participating in philanthropy. Part of it could be tax advantages, sure, but a lot of times people realize or hit this point in their life where they go, okay, I've done what I wanted to do. I want to give back now. And this is why you see most billionaires, people with people that accomplish a ton in their life, spend the last 15 years of their life giving back and pouring out. And so when I talk to people, I ground it in my why, my capital raising in my why, where I say, sure, your money's going to make money, but your money's also going to make a massive impact in this world. Your money's also going to affect this, and that directly impacts families, that directly impacts the foster care system, that directly impacts this or that. And so really, when we're able to have a good why and why we do things, people want to be a part of that. They want to feel like they're doing something that is higher than themselves. People want that feeling. So I'm pretty excited to walk through a lot of this stuff with you. And for people, for people to feel that makes it really easy for them to feel like they're getting an opportunity that they wouldn't normally have. Now, this is really just me. Oh, by the way, I used AI to create this whole entire thing. This whole entire AI, and I'll show this to you guys because I actually just did this to maybe some people that are on this call right now. They watched me do this in our live last week in the coaching call in our community, where I actually put together a pitch deck using AI in less than 5 minutes. So then I put together this deck using AI in less than 5 minutes. And that's why you see all these random photos. So for me, in my first capital raise, this is in the very first fund I ever started, my very first capital raise. And I share these number with you because, of course, I've raised more capital since then. But I share this number with you because this is where a lot of people are. You've never raised capital before, or you're just starting and you don't know what's possible. I had no fancy background. I started from scratch. My very first fund, blind pool fund. And if you listen to everybody talk about it, they say that the hardest thing to raise capital for is a blind pool fund because you're just going, hey, put your money in here. I'll grow it. Trust me. Whereas you have single asset syndications that a lot of people will invest into and they go, here's the property, here's the thesis, here's our plan with it, here's the exit strategy, here's our timeline. And people are like, great. And then you're like, this is the returns that you should expect for that. In this fund I raised $2 million in my first 6 months of starting from zero. I maybe only had 2 private lenders at the time, raised $2 million in 6 months with no track record in the fund world. But really with 3 key principles: clarity, consistency, and curiosity. We're going to talk about diving into that. And I actually want to give you guys 3 freebies just for showing up. So like if you showed up today, DM me and let me know that you came, or I would just say DM me and let me know that you came so I can give you guys these freebies. For some reason, I can't like see who comes here. I don't know who's in here. So I do know Mario's here. I know Billy's here. They'll get that. They'll get this stuff. So if you just type in the chat and just be like, I'm here, I'll make sure you get these freebies, because we're going to walk through the clarity aspect of it that helps people to really, like when you're raising capital, the clarity aspect really helps people to know that their money is in a good place and it's safe, and the numbers they make sense. The consistency of it, knowing that, hey, we've done either this many deals, so we have a track record. It may not be in the funds, but we have a track record in this type of product, or I'm partnering with somebody in this type of product. Casey, so good to see you. I'm so glad you're here. Partnering with somebody in this type of product. And then we'll talk about the curiosity aspect of it, of meeting people where they are with a sense of curiosity. Oh man. Sorry about that. Okay. So this is what you're going to learn today. Finding the right investors, attracting with clarity, engaging with them legally and confidently. Because when we start dealing with capital raising, we start dealing with a lot of compliance. So I actually met with me and my partner, Seth. He's an SEC attorney. Him and I help people to launch and scale investment funds. We met with these 2 guys today that are looking to launch their investment fund. And they had some stuff they were thinking about doing. And it's nice for us to come in and go, hey, actually the SEC would frown against that. Cool. Calandria Williams. I'll make sure you get that as well. Thank you so much for being here. But it's nice for us to be able to be like, hey, The SEC frowns upon that. You don't want to do that. And so my goal for you guys also is to make sure that we are engaging with them compliantly and confidently, and then being able to scale the stuff with AI. So I'm excited. So short, the track idea, here's what I'm going to share with you guys. I'm super excited about this. This right here is my private lender calculator, the one on the left. This brings so much clarity. It is not even funny. You can see there, it's like, hey, what's the deal look like? What's the purchase price? Is there rehab if you're doing some sort of rent, or like some sort of real estate property? What's the rehab look like? What's the loan amount look like? How much do you think they should make? If it sells for this much, how much would they make? If it's sold for this much, how much would they make? Just an extreme amount of clarity with a timeline on it. So just for being here, I'm gonna make sure you guys get that. I'm also gonna walk you guys through a practice today on building out incredible avatar builder. There's a lot of times where people will say, build your avatar, and then you go, I don't know what the heck that means. I don't know what that looks like. I don't even know what you want me to do with that. So, oh man, I hope this doesn't last long. But I meant like my cough doesn't last long. This could last for hours. Depends on how long y'all want to stay. But I'm going to show you guys how to build out that avatar builder. I'm going to make this so practical for you guys. So then you guys can go and then use that. And then I'm going to give you also like my scripts for engaging with people, having that conversation. It's not necessarily the conversation after, like when you get the pitch, but at least engaging with people. I'm going to walk you guys through all that. So I'm going to give you guys that. Here's the objections that I had to overcome. I don't know people with money, right? I don't know people with money, but the reality of it is connections are built, not inherited. It doesn't matter. Now there's some that can be inherited, but for the most part, none of us have connections that we inherited from a family member or from things like that. These are connections that we've made over time in our life. And then people have grown to know, like, and trust us because of them. So we need clarity on our ideal investor. We're going to dive into that in just a second. It's not necessarily always going to be our rich uncle. There are times as we first start raising capital, of course, your immediate circle. And we have our, we call it our capital circle in our fund founders community. Our capital circle is like who's in your capital circle. And typically we say, hey, like there's 25 people. Let's find what they look like in our capital circle. Sometimes that is your rich uncle, but a lot of times in the beginning, it's mostly friends and family. But then how do we start expanding outside of friends and family to do that? And then the right approach to attract the right people. That's how we start finding people with the money. Here is another objection that I had was I don't have a track record. This is really key for me. Confidence comes from clarity, not experience. So that's where that calculator is going to help a ton, because now you don't need necessarily the experience if you can show how the numbers number. There's also, I really love what I had here at the end. Every successful investor backed someone's first deal, right? So like, and somebody's going to always back your first deal. And so somebody's that's going to have to like, know, and trust you, but then also trust the numbers because you've clearly written it out. And so I'll show you guys, one of the things that we do in our communities also is to show you guys how we structure the first, structure your deals. But some of you may also have that experience because you've done fix and flips. You've done some multifamily stuff, or you've done even like you've wholesaled or something like that. And then now you're moving into fix and flips. So you understand those numbers. Or here's another big part. You've partnered with somebody. So you don't always have to be the main person to attract the capital. You can partner with people that have a really good track record that help you to get there. And you essentially will JV with them on your deals. So this happens a ton. And I actually think this is a really lost art in which we go, I want to go out and do everything by myself, pull myself up my bootstraps, and then really like tough it out. Where I think there's a lost art of apprenticeship. And I think in this space, when we are raising capital from people want to know that you have the experience, or you're working with somebody with experience, and then you're giving them the opportunity to tie their money to that experience. So you don't have to be the one with the track record. I would highly suggest you not borrow money on your first deal. I would highly, highly suggest it. But if you are partnering with somebody and it's your first deal, then that makes a lot more sense. Then other people feel a lot more comfortable. And so when you share with them, this calculator that I have over here on the left, when you share things like that with them, it brings a ton more trust and clarity that people want. People typically want to know three things when you raise capital from them. They want to know the timeline. They want to know what the deal is, and they want to know how much they're going to make. What are their returns are going to be? So right here, that calculator by itself gives them all three of those things and breaks it down for you. You know what? Let me actually just show this thing to you guys, okay? I don't even know if this is the time for me to show this to you, but I'm just going to show this to you. So like, let's say you have a deal, right? Whatever. I just used one single asset, like one single house deal right here. This calculator right here is going to explain all of that stuff. If your acquisition price on this is 129K, but the appraised or the ARV of it is 329, you're going to put that stuff in here. And it shows you, look, blue, you change. Do not touch red or green boxes. Boom. Everything is in here. Your private lender variables are purple. So blue, we're going to change this. What's the construction cost? What's the title closing cost? Assignment fee if there's one, appraisal, all that stuff. So if I think it's going to be 45K instead of 60K, boom, my numbers will change in here. And so you'll see all the numbers come in here and change. And then if I list it at 315 or what's the actual sell price, that changes things as well. So then I'm coming down here and I'm going, all right, if I'm asking a lender for capital, then I'm saying, okay, first position mortgage or first position, or so how much is the total that I'm going to need to borrow? Right here, you see 178,000. All right, I know that I can get 178,000. This is actually going to tell me amount needed for first and second position. And what's cool is you go, how much is somebody going to cover? If I know that I have a lender that's going to cover 80, I'll put 80 here, and then 20 automatically changes here, and the numbers here automatically change. Look at that. That's crazy. All this stuff automatically changes for you guys, even these numbers down here. And like, I actually built this calculator. Nobody built this calculator for me. I actually built this calculator. So this is really cool because it dives in and everything's kind of connected in here. And it shows you if this person's going to come in and then give you 100, you'll see this changes to 0. This changes to 0. The numbers change. Second position needed, 0. Very cool calculator. You guys get this for absolutely free. But then this tells you, all right, what are the total points? If I'm going to talk to somebody and they're going to do 1 point at 12%, for 6 months, all the numbers change, guys. This is so cool here. You know how much clarity this provides for people? So you go, hey, I'm going to borrow 178,000 from you, and then I'm going to hold it for 6 months, and I'm going to charge you, heck, 0 points, 13%. This is how much you're going to make. You're going to make an actual IRR of 6% because I'm holding it for 6 months, or you're going to make 12% IRR. But if we say, okay, you want 1.5 points, if you don't have to do points, guys. But like, by the way, it's going to show them how much they're actually going to make. And then down here, it also shows you if the house actually sells for this much. Oh, yeah. I can make that a little bit bigger. Probably better right there. If the house actually sells for what we think it makes, if it sells for 325 or 308 or 292, here's how much. One, we're going to profit, and then how much you're going to make. So it's a really cool calculator. You guys are going to get this. It also has a walkthrough video showing you exactly how to use it. So even though you couldn't see it right in here, it shows you a ton. So that's clarity. If you've got an investor that you can show this to, they're going to be like, wow, this person has everything dialed in. Their numbers are dialed in. That comes with a certain level of trust. That comes with a certain level of, oh my gosh, these people know what they're talking about. Even if I haven't done this before, it seems like I've done this before. I've given contingencies. I say, what if it sells at, heck, 85% of what we think it's going to sell for? Okay, cool. We're going to gross 74K. Estimated profit is going to be 74K right here. And then, like, they know, okay, there's still margin in there. I'm going to get back, 276,000, which means the first position note gets paid off, all this stuff. So it really lays it out for them and gives like your investors the clarity that they need. So stuff like this, really important. You guys get that. Okay, where are we at? Now, let's see, where are we at? Okay. Objection number 3 for me, especially when I first started, and a lot of you probably feel, I'm scared to manage other people's money. There is, and the reason why compliance is so important. So this is why when we're managing other people's money, you have a fiduciary responsibility to act in the best interest of that, protect their money, and do certain things that help you to protect their money. For instance, a lot of times investors will like the fact that, hey, if we're borrowing your money, we're putting you on the we're creating a deed of trust with you. So then your first position, if I can't fulfill on this, then you get a deeply discounted property for whatever. Or if we can't fulfill on this, then you guys get the title to this. There's so many things that you could do to protect their money on here. And here's the thing that I do want us to think about. As we get nervous about protecting and managing other people's money, yes, you do want to have it dialed in, but perfection isn't required. Really, it's transparency and preparation. That's what's required. So even when my fund last year, a fix and flip fund, we raised capital and the market absolutely sucked last year. So when I said, hey guys, I have to pause distributions to make sure that we're moving at a rate in which we should be able to sustain growth, make sure that we don't go under and protect your money, this is what's happening. But I didn't hide from that. I went and I tackled it head on. I'd made videos every month. I sent out emails to them, letting them know exactly what was going on with their money. Perfection wasn't required. Transparency and preparation is what was required. And so we wanted to clearly document that. Does the investors also look at the resume? So good question. So this is what we're talking about with track record, right? So some investors will want to know about your track record and they want to know what you've done. But that's where you could say, hey, even if I haven't done this, I've partnered with people that have done this. Or yeah, sure, if you have a track record, then that's helpful. Really, investors like to know if they can trust you. They care about more about trusting you than your resume, so that they trust you and the numbers work, right? You show them the clarity of that spreadsheet and how that works out, then that makes it significantly more helpful. That key in communication, yeah, the key is 100% communication and transparency. And so, I mean, even currently up to this moment, you know, because we're a fund, so like it's all public anyways, but I give like, hey, here's our P&L, here's our balance sheet, here's what we currently have in cash reserves, here's what's going on. And I'm giving weekly updates right now just because of the nature of the fund and where it is. And we're winding down this fund and we'll be done at the end of this year and launching another one next year. And so I just want to let them know like, hey, this is where we are. This is what your money's doing. That transparency is key. So then with something like that, especially Mario, when you think about that, if you guys communicate well, that is 90% of the battle. The thing that I run into the most is when investors, like the things I've run into is when investors go, hey, I haven't heard from you in a while, and I get nervous. So like, you want to make sure that they don't ever go, I haven't heard from you in a while, I'm nervous about my money. And so then we want to make sure that there's an abundance of clarity, keeping them updated, even if it's just small things. Hey, we're hitting the market this week. We're doing this, we're doing that. Even small things of like monthly, just check-ins with them. Investors love to feel like at the core of who we are, we want to feel known. We want to be valued, and feel valued. And so if we can let them feel like, hey, you guys are a part of what I'm doing. You guys are valued. I appreciate you. Here's what's going on. Then they feel that and they appreciate that more than you know. So clear documentation and communication eliminates all of this fear. And then you'll gain confidence with each new investor conversation as you answer questions, as you take them head on, and as you begin to do more deals where you're managing other people's money. And this is why, so if you guys are starting a fund or things like that, this is why compliance is so important. So for a second, because I don't think I really have a huge, yeah, we're going to talk, y'all, we haven't even really got into like the practical teaching yet. So this is why compliance is so important. For instance, I talk to a lot of people, and here's what's really, really interesting. The reason why I do what I do. So when we talk about my why on why, like I teach this, because I could be anywhere. I could be upstairs putting my kids to bed, which I did a little bit earlier today, or working on something in my own business. But I teach this because, one, I know that there is a massive lack of access to information and capital between people like me, minorities, immigrants, women. I'm not a woman, but between minorities, immigrants, and women in the United States. There's a statistics that says there's $82 trillion worth of assets under management in the US right now through private equity, hedge fund, real estate, all that stuff. 1.4% of that is managed by minorities, women, and immigrants. That means 98.6% of all money invested in America is managed by white men. And so, unfortunately, what also lacks is the education between managing other people's money, or the lack of education and knowledge in funds, SEC compliance, managing money, all those things. So I often run into, and this is, I think there's a direct correlation to this and to that statistic. Hold on, give me a second. a direct correlation between that statistic is I run into a lot of minorities, immigrants, like so blacks, Hispanics. I run into a lot of people who are clearly violating SEC laws, but not because they are doing it maliciously, but because we just don't know. Like I have people call me and they go, hey, can I just have people wire me money and then I give them a return? And I'm like, that's a security. It doesn't sound like it would be a security, but the SEC categorizes a security as anytime somebody gives you money, they have no active involvement in the deal, so very passive, and they expect a return. That is a security. Now, granted, you won't get in a lot of trouble for that, but if somebody's wiring money into your bank account and you don't have the proper paperwork, you don't have the proper loan, that would be a business loan. If you don't have the proper loan documents for them, then that is a security. And so you want to make sure that you have the proper loan documents. And then I also run into people where they go, hey, I've got about 2 or 3 people that are sending me money, which is great, and I'm giving them returns. And I go, okay. I'm in my mastermind, Collective Genius. It's an expensive mastermind to be in. These are high level operators. And this black dude comes up to me and he goes, man, I got these people and they're giving me about $400,000 between the 3 or 4 of them. And they wire me money, right? I have an LLC bank account and they put it in the LLC bank account and I give them returns. And I go, hey man, that's a security. You'll go to prison. And he goes, ha 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 ha. And I go, no, prison. The SEC does not play around, right? These three letter government companies do not mess around. Just like the IRS doesn't mess around, the SEC doesn't mess around. That is a security. You will go to prison. And so I had him call my attorney very quickly. And then I ran into another person who was like, hey, can I just have somebody like give me a loan? Sure, you can. You need to have the right documentation. So it's not even about the fact that they're doing it. It's about how they're doing it and not having the documentation with clear disclosures on what could happen. Because at that point, you're acting as a fiduciary of somebody else's money. And the SEC is like, hey, there are rules and regulations around that, just like there are other things. So as you think through that, think about how you guys are raising capital and how you're having these conversations, because it's very, very important to have the right documentation and to communicate really well with people on that. So what we're going to dive into today a little bit is understanding and preparing your platform, building the foundation for successful fundraising, activating the ask, implement strategies to reach potential investors, and then steward the story, maintain relationships, and deliver on promises. Oh, no, you're good, man. Oh, I didn't notice. And deliver on promises. The system framework works regardless of your experience level. And then we're going to talk about, even if you are raising capital, how you can elevate it. So pretty excited about that. So preparing the platform, I'm going to show you guys, I'm going to kind of show you guys a little trick here. Identifying your investor avatar is creating a detailed profile of your ideal investor. But then you go, well, Devin, how the heck do I do that? What the heck does that look like? And so I'm going to show you guys here. I have, this is a really, really cool investor avatar template for you guys. And I actually use this with ChatGPT. So I went in, used ChatGPT. I spent the $20 to do deep research, to have deep research so that I could do this. So it's worth your $20 to come up with your investor avatar and using this template. So I'm going to share this template with you guys. So you guys get this. This is fantastic. It is a 17-page template. Don't worry. You don't have to fill out all this stuff. ChatGPT will do this for you. But what you do have to fill out is your anything that's highlighted red here. So your story, your product and what you offer, or your investor funnel. So if you have free lead magnets, if you're going to do events and webinars to attract investors, personal consultations or discovery calls, what that looks like. And then the next one is your authority and credibility. So these are the only things you need to fill out. Here's one thing that I highly, highly, highly suggest you do. This is amazing. So just in general, because if you're using any sort of AI platform, it could be Claude, it could be Gemini, it could be ChatGPT, Perplexity, whatever you guys are using. The thing I would highly suggest is for you to pull up a Loom video. I mean, like straight up. Loom right here is in my thing. I'll bring this up and then it will record my screen. I would pull up a Loom video, have it record me, and I will tell my full life story. from beginning to end. I did this and it took me 56 minutes to tell my full life story. I took that recording, I uploaded the transcript into ChatGPT. So now ChatGPT has my full life transcript uploaded in it. Oh no, hold on, give me a quick second. I think I messed it up when I did that. Hold on. Oh no, give me a second. Should be good? Are we good? My camera messed up. Hold on, sorry guys. Oh dang. Shoot. No, I don't like that. That sucks. Okay, give me a second. Sorry guys, I'm trying to figure out what the heck happened to my camera. I think I kind of know, but let me fix it. There we go. Okay, cool. So, so ChatGPT has a uploading of has a script of me filling out or telling my full life story. So now, anytime, and I've had that saved, which is cool. So let me actually just show you guys right here. So anytime I have it completely saved for me and who I am. So I have it on my Fund Founders thing. So if I go to my project files, you'll see that I have down here, I think, well, let me see here. It's in one of these. I think it's in maybe Funds on Fire podcast, but it has like my whole life story on it. I'll find it, but my script is completely in here. Okay, cool. Yeah, my script is completely, my whole like life story script is in here and it's saved. So you could actually go up to your settings in ChatGPT, go to personalizations, and then you could do reference saved memories in here and even reference saved chats, your custom instructions. I think this is where I have it. I don't remember, but you can save your life story on here. So what's really cool is if I need to do anything in ChatGPT in the future, I'm in the process of writing a book. If I need to do anything like that, it references a full transcript that I didn't even have to type out. I just talked about my full life journey. And now I'm like, which one is it in? Here it is, full life journey. That's exactly what I call it too. It's a full life journey PDF and it's massive. It's got everything, my whole life in there. And then like it references that. So then I can take that, put that in my avatar. So then now this will allow me, when I'm looking at my target avatar, it will help me to engage with people that are like me and then use my story to also engage with them. Because then, and then you could talk through, as you're telling your story, what's like backstory? Where did you grow up? Did you have any early experiences? Call to adventure. What event or realization pushed you in major change towards real estate or fund management? Did you have a mentor, obstacles, transformation, the breakthrough? These are things that you mention as you're just literally talking it, just straight up talk it. And then what happens is I copy and paste the link here, or you can like export as a PDF and put it into ChatGPT or whatever AI that you use. And now it has your full background, which is great because it can contextualize all of your stuff to that. And you didn't have to type it out because that's always the worst part. Your product here. So you put in what is your goal? Like what's the product? What's the benefit? What are the features? And then for you, if people do webinars, which we think investor webinars are fantastic, especially if you start a fund and it's a 506c, then you can start funneling people into it and it kind of works on autopilot for you. But if you have that webinar, what does that look like? Because this right here is going to help you to attract the right people and to be able to fill out. And what happens is now, and I think you may have seen this in here, that if I go over here to Fund Founders, you'll probably see that I think it's going to be in PF Capital. So you'll see here that this is all of my docs, but I should have in one of these. I have in one of these. I think it was in here. Fund Founders. It's in one of these. But I have this full investor avatar in there. So then now every time it writes my ad copy, every time it writes my scripts for things, every time it writes whatever, it contextualizes it to the investor that I'm reaching out to because it knows them so well and it knows what I'm doing. So it's really good. So then what's going to end up happening? So you'll see that this is like 17 pages, but mine, let me see, my actual one, I'm going to show this to you guys because I think this is actually really cool. So Devin's avatar. So if I go in here, My avatar one is right here. My avatar one is actually 47 pages. So look, this is my actually it's 41 pages. This is my investor avatar sheet. The great thing about this is I did not fill all of this out. ChatGPT did. But what I did do is I exported this and I uploaded it into ChatGPT. So now every single time that I write any sort of copy that has to go out to an investor, it knows how to write that copy to reach that investor. So it streamlines, right? So this is the AI part of the thing where I talked about what we're going to talk about today, right? We're talking about scaling with AI, leverage technology to multiply your efforts efficiently. It is so much harder to build a 41 page. It's never mind. It's impossible. I'm not doing it. You're not doing it. Building a 41 page avatar builder rather than me filling out 3 sections, right? So what you'll do is you'll copy and paste this whole entire thing. You'll just copy and paste this whole entire thing, all 21 pages in ChatGPT and go, hey, take the context. Say I filled out 1, 2, and then I think just 5. I filled out 1, 2, and 5. Fill out the rest of them. So I put this in deep research. Fill out the rest of these sections to help me reach my target avatar. And so then it fills out, hey, are my competitors, like what are my competitors and the influencers? It helped me to do that. So if I go over here, it filled out number 6 for me, right? Like it went out and found who my competitors were. Look at this. It says my competitors are Bridger Pennington, Hunter Thompson, other notable people. Richard C. Wilson from Family Office Club, Vincent, this person, these people. And what's funny is it even mentions Seth Bradley as my competitor, but he's actually my business partner in this. So it's really funny because it's like, hey, he's an SEC attorney and he's an influencer in this space, but he's also like, he would be technically your competitor. Can you put the avatar criteria up again? Yeah. So I'm going to give this to you guys. This is yours. You'll get this at the end of this call. Don't worry. You're going to get this. So there's, you have this. I'm just telling you guys how to fill it out. 1, I said, hey, here's my Loom video. Actually, I have my Loom video right here. So boom, if you want to see, check this out. 51 minutes of literally me just talking, early life challenges. This is just me talking about my life. And then I just took this transcript right over here in transcript, and I just copy and pasted this whole transcript into ChatGPT and said, hey, this is my life journey. That's literally what I did. But this one has just the link right here. And then what happens is I told ChatGPT, I am filling out section 1, which is my life journey. I'm filling out section 2, and I'm filling out section 5. You fill out the rest. And so when I do deep research, and just make sure you guys, it's worth it. The $20 just to do this is worth it. So deep research is right here, worth it. To do this and fill out this whole thing for you. And then you just copy and paste it all right here. Very, very simple. And this will help you to get your target avatar that you then can know, oh, wow, I didn't know these were my competitors. And you should read through it. I didn't know these are my competitors. This is the ideal demographic. So it came up, just so you know, it came up with this based on for my capital raising one. So for fund founders and what we do. So it has competitive influence, and then it's like demographics. There's people that are going to be between 30 and 45 is the sweet spot. Many are in their 30s. Here, education, bachelor degree, occupation, professional entrepreneur backgrounds. Some are high income earners, income level, middle to high. These people, locations. It's telling me all of these things that probably a lot of you guys probably fit into because it's for fund founders. So it's really, really cool. So it filled out all of this information for me. I did not. And then now I feed it back into it and say, these are my people that I want to hit up. So really cool, guys. You can also use this investor avatar builder as well, which is great. This helps you to name them. I actually am a strong believer in I read something a while ago and it said, when you come up with your investor avatar, name them. Like you name them. So when you write your copy, when you write your emails, when you're thinking through that, you're thinking of talking to Sean. You're thinking of talking to Rachel, or whatever that avatar's name is. Accredited Adam, whatever your avatar is. Are they accredited, non-accredited, average net worth, investment goals? So you can almost summarize this right here into this right here, your avatar builder. And you guys have this. I'm gonna give this to you guys as well. So that somebody goes, who's your target avatar? Like I was on a podcast today and the guy goes, well, who's your target avatar? And so I told him. And so it's cool to be able to have this. So then now I want y'all to have that. All right. All right. Where are we at? Okay. Another thing that I really want you guys to do is think about the platform in which you're going to do this. I strongly suggest whatever platform it is, you just go all in on that platform, whether that be Instagram and how you do that. And you see a lot of times I use Instagram to educate people. And that's how I get a lot of my investors, because I do a lot of my education on Instagram. There are a lot of people that raise capital on LinkedIn. And the good thing is when you know who your investor is, you now can create and cater your capital, like your conversation, your copy, all that stuff to that investor, which is awesome. And so then having that platform builds credibility as well. So for me, right, having a podcasts are really good in these spaces, because I know people that will be like, man, Devin, I don't know you. I don't think Instagram is dead. Definitely don't think Instagram is dead. It's still one of the largest. I mean, it has, I think 3 billion users on it now. I guess it just all depends on how you use Instagram. I don't think it's dead. I find investors on there and I find all kinds of things on there. So not for me. So it just really depends on how you use it, of course. So then if you feel like it's dead, then go to X. It all depends on what your best way of communicating is. A lot of people don't do well on Instagram because that's shorter form content, smaller, easily digestible, very similar to TikTok. Some people are better writers. And so then like Alex Hormozi, for instance, really good writer. So things like X and LinkedIn, fantastic for Alex Hormozi because he's a really good writer. That's his place for that. Some people are good speakers. I talk a lot. So things like podcasts work really well for me, or things like YouTube work better for other people. Find where your platform is, go all in on that one platform. Don't try to be a mile wide and an inch deep on different platforms. Find that platform, contextualize your content to that platform, and then push everybody to that platform and meet them there, because that's where they'll get to know you. And you'll be really surprised because people will come up to you and go, man, I feel like I know you because of this. So you'll be in investor meetings and you'll never meet that person before, but they go, man, I've listened to your podcast, I've watched your videos, I've followed you on this, I've done this, and I just feel like I know you. So utilize that platform, but also make sure you're doing it compliantly. Navigate regulations to protect yourself and your investors, which means don't go out and start guaranteeing returns. Don't go out there and start marketing your deal if you can't. There's a lot of times people will market their deals. If they're doing it compliantly, it's because their fund allows them to do that. They're a 506c, they can market it. But then you look at them and you don't know that, and then you're like, well, they're marketing their deals. Oh, yeah. So I'm not saying 500K for one deal, but you can find multiple private lenders that will lend on your deal. So that's a great clarification. How can you legally raise 500K in 30 days if you don't have a fund? I'm not saying you're pulling in 500K. I'm saying you've got 500K that you've seen and that you've tagged and you've recognized, and they're sitting on the sidelines and they're ready for you to have a deal. So that could be this person with 50, this person with 100, this person with 200. And they're like, hey, I've been wanting to invest. I've got about $200,000 that I'd be looking to invest in a deal with you. Great. That's what I mean 500K in 30 days. Not necessarily pooling 500K that you then can use however you want. Of course, you want to make sure that you are not violating any SEC laws, and you're not just pulling money or pulling capital. I'm saying that you are able to quantify $500,000 worth of people that you have been able to engage with in the next 30 days that said, hey, I've been looking to get into real estate or get into this, and I have this sitting in my 401k or have this much sitting here. I know you said something the other day that said that the 3 things investors care about, and one was that they want to know how their money is protected. Yeah, for sure. And so we talked about that. In some ways, you can have them protected on a deed of trust. So a lot of that, I just threw that number. Oh, yeah. So 500K in 30 days is the name of this though. So so a lot of times we say, hey, yeah, you're protected by deed of trust, right? So we put you on the deed. So if anything were to happen, the property gets deeded to you because we couldn't fulfill on this. So protected by a deed of trust, that they're on title. There's all different types of ways that you can protect them, especially specifically with real estate. Now it becomes a little bit different if you're dealing in private equity or things like that. Those are different. Then you could collateralize the loan against collateralize it against equipment, against certain things. It just really depends on what you're raising for. Okay, activating the ask. This is where I also am going to give you guys our scripts. And so this is where, honestly, I love this part of it because one of the things that I did, you know what I'm going to give you guys? I'm going to give you guys the scripts, and I'm going to give you essentially like a tracker to track the people that you've been talking to. It's just an easy spreadsheet, nothing crazy. That you guys talk to, the people that you talk to, and like where they are in the process. So for me, what I mean by this is ask without pitching. What I do is I would engage with people, and I'll tell you, when I first did that $2 million raise, I went onto my Facebook and my Instagram, and I literally went through my whole friends list on Facebook, and I found, and I put them onto a spreadsheet, all of their names, the people that I thought could potentially have money and be interested in investing in what I'm doing. What I did not do is go and then start engaging all of them and go, hey, would you be interested in investing? Blah, 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 blah. No, I went in and I said, hey, I noticed you and your family went to Disney recently. I'm thinking about taking my family. What are 2 tips that you have for me? I'm kind of nervous because I got a 3-year-old. And then we have this conversation, and then and this is somebody I haven't talked to since high school, but I looked at their Facebook for 5 minutes, looked at their most recent post, and was like, oh my gosh, I noticed that you did this when I messaged them. I was genuinely curious. I've talked about this before, but this idea that interested people are interesting. And so if I'm interested in them, then naturally they become interested in me. And so now, because of that, I'm like, hey, tell me about this. And then, oh, okay, what are you up to now? Like, oh, what are you doing? Okay, great. And then what happens is they now become interested in me, and they start asking me what I do. And then I give them my quick little elevator pitch. Oh, hey, I help people. I help people to passively invest in a deeply discounted real estate and get double-digit returns. And they're like, oh, okay. Or I help people get double-digit returns by passively investing into deeply discounted real estate. And they're like, oh my gosh, okay, that's cool. And what happens is from that, they either go, oh, that's cool, and then we keep our conversation going, and I don't say anything about my investments. Or they go, that's really interesting. I've been looking to get into real estate lately. Tell me more. Oh man, that's really interesting. I've been looking to do this. I've actually thought about that for a little while. Oh, really? Oh, that's cool. Let's talk about it. The more I engage, the more I actually just leave it up to curiosity for them, the more they kind of go, okay, tell me a little bit more about that. I want to know a little bit more of that. And then we start engaging, and then I go, oh, you know what? Actually, let's go ahead and get together. Let's say this time. And then what happens is then we're having investor conversations, and they may not invest now, but they'll invest later. They'll come back later, especially when you start sharing about what you're doing, the impact you're making. And that could be on written form on LinkedIn. That could be in a video form on Instagram, which if you follow me on Instagram, you've seen me talk about the impact that we're having, the lives that we're changing, the things that we're doing. And then you've also seen me educate people about how much is sitting in their 401k. If they have an old IRA from an old job, they can transition that into a self-directed IRA and invest that into real estate. So then now their IRA is investing into real estate. So there's a lot of stuff that I do from there, and then I engage with them. Another really cool thing, and this is why I like social media, is it allows you to instigate the engagement. Whereas so if somebody engages on one of my polls where I'm like, hey, you've got an old 401k from an old job? And if somebody says yes, then okay, I DM them and I go, oh, no way. You got an old 401k from an old job? Man, that sucks. It's probably just sitting, not doing anything. And they're like, yeah, oh my gosh, Fidelity sucks, blah, blah, blah. And then I'm like, yeah, did you know that you can actually take that old IRA and invest it into things like crypto and property and stocks? And then they're like, what? I didn't know that. Oh yeah, we have a bunch of investors that invest their old 401k with us. And then they're like, oh really? That's interesting. Tell me more. And so then now I'm able to engage with them by instigating curiosity, but I'm not asking. That did not sound pitchy at all. And what happens is they came to me for it. So it does take me actually having to go out and do things in order to bring people to me, but I'm actually being very proactive when I do it and very strategic. So leveraging multiple channels, we talked about that. Having the channel that you feel works for you best. That could be a podcast, that could be YouTube, could be LinkedIn, could be Instagram. Follow curiosity. Let genuine interest guide your outreach efforts, right? People are engaging with my post. People are liking or commenting certain posts and certain things that I do. It's okay because they've instigated, you've created the opportunity, and then now you're just captivating or capitalizing on the opportunity that they've created. They've engaged back with you in some way, shape, or form, either by liking it, by commenting on it, by clicking on something, like voting on it, sliding the slider, whatever, hitting the poll, whatever, then that makes it really helpful. And that's what I also like about LinkedIn, is because when somebody comments on yours, it actually opens it up to their whole network. So then it will come up, like it'll come up in the feed of the people that follow them or are connected with them, which is cool. And that's what's great about LinkedIn, is because then it allows you to really broaden. And that's mostly a professional social network that has people that are more business minded or reading more business things, because that's what that channel cultivates. And then be consistent. You guys have noticed that I've probably become a lot more consistent over the last couple of weeks because I have a goal. One, growing fund founders, but two, I'm about to be in the process of raising capital for our next fund. And so I want to be top of mind, where people then go, man, Devin, you're doing a lot. You're everywhere. Holy smokes. Every time I get on the phone with somebody I haven't talked to in a while, they go, man, it looks like you're crushing it. Right. And like, sure, I may be or I may not be. That's just the perception that they have, though, that I'm doing a lot of things. But the thing is, I'm very transparent and I'm very open. So then they see, one, I'm an expert in my, I'm an authority in my space. But then also they're seeing all the things that I'm doing and they want to be a part of it, which is great. And so that leads to, like, when we want to be a part of it, then now we have this story that we get to cultivate with them. So we get to follow up with integrity. So as these people are, one, investing with us, this is really cool. There's a sense of urgency that you want to have when it comes to your deals. So when I talk to people and I go, hey, you've probably noticed, you've probably seen that, especially if we've had previous conversations and like somebody goes, oh, that's cool, I would love to get to that later, or I would love to do that eventually, where then I go, oh man, hey, I wanted to reach out. You were on my mind. I never say this. I'm just following up. Oh, you know what? I'm just catching up, or whatever that, I can't remember what the one that nobody should use is. But what I always do is I go, you know what? I was either talking to my team earlier, or I was thinking about you earlier, because I was like, man, we talked about this and this would be perfect for you. Or, hey, since we last spoke about this, we've almost filled up the room that we have, and I've almost oversubscribed for this fund. Or, hey, like, we only have a couple of spots left and I can't guarantee that you'd be able to get the return, right? Like, we can't guarantee that stuff anyways, but like, hey, this is one of the things that we'll say. We go, hey, we're filling up all of our early incentive slots. And so the next are, because a lot of times when we do our funds, we structure them where, like, the people that come in our first 2 million, that they essentially get a founders or an early investor bump up incentive, where they get bumped up in their pref or their preferred return. That's kind of how we do it. And so then it helps me to incentivize, hey, we're filling up our early enrollment. And so if you want to lock in that pref, I was thinking about you and I knew that 10% sounded really appealing to you. We only got a couple more spots for that. If you're interested, let me know. So we follow up, but we're also following up with consistently and helping to maintain that communication while also pushing towards a sense of urgency. So proactive updates. I also will tell people, hey man, dang, we fully subscribed on that, or we completely missed that deal, or hey, we closed on this deal. And this is why it's so important to grab their emails, because whenever you close or you fully subscribe or you close a deal, and a lot of times on our marketing material to investors, we will say like, oh man, hey, look, we just flipped this deal. Our investor made this much. Especially if they're on our email list, we have a pre-existing relationship. It's totally fine for me to be like, oh, our investor made, between 12 and 15% on this deal. Super excited for them on that. Cause then they feel like they're getting FOMO. FOMO really kicks in on that when they see, dang, I should have went on that deal and I didn't. So we always want to make sure that we're getting their information, putting them on some sort of email list, and then keeping them updated when things come out. And then even when we're like doing deals, so they can see we're doing deals. That helps to build long-term trust, and it helps to build transparency. Hey, this was an awesome deal that we had. This is how much that we made. This is how much we sold it for. Boom. Just because you're building transparency doesn't mean you have to be like negative and vulnerable. I'm building transparency by giving them numbers like, hey, we sold this property for this one. This is the profit that we made. our investor made between 10 and 15% on this. Very general. I'm not giving any sort of specifics on it. So really cool to be able to have that. And it's super helpful as we're building out that pipeline. So I would suggest, especially if you're just using a spreadsheet to keep track of your people, something like MailChimp, some sort of thing that allows you to be able to reach back out to your investors and to be able to reach back out to your investors and to be able to cultivate that relationship and keep in touch with them. You want to stay top of mind. This is why I always suggest too, if you launch a fund, that if you can, you do monthly distributions, quarterly at the minimum, because what happens is you stay top of mind. Now, if I were doing like a yearly distribution to somebody and they get a check once a year, once every 6 months, even sometimes once every 3 months, then like they're like, oh my gosh, I forgot about that. That's pretty cool. But if they get a check every single month or at least once every 3 months, then they're telling their friends every time they get a check, they're like, oh dang, I just got paid for that. Or they get their, their distribution deposited in their account. They're like, oh my gosh, I get paid every month from this. This is so freaking cool. And then they're telling people about it and they're telling more people about it. And then they're excited about it more often rather than if they got like one big one every 6 months or one big one every year. That's why it's always good to be able to do monthly distributions or quarterly distributions if you can. But that's also why it's good that, like, let's say you're doing a sub 2 deal and you're borrowing 40 or 50K for that sub 2 deal. It's really nice if you're borrowing, because you're going to borrow that for a couple of years probably, because you're not going to, unless you sell the property, you're not going to be able to pay them that back unless it's from the profits of another deal. So like, if you're like, hey, what we're going to end up doing is I'm either going to pay you off on this with a return in 2 years, or I'm going to refinance and give you your profits. But what we're going to do is we're going to split 50-50, 70-30, most likely like 50-50. We're going to split 50-50 the rent on this until it's either paid off or I refinance you out of this. That's a really good way for them to feel like they're a part of it. They're passive, they're getting monthly income, and they're telling their friends, and they want to do it more. So anytime you can involve them on something like that, don't think of it like, man, I'm giving away 50% of my profit on this deal. No, like, trust me. Typically, here's what ends up happening. They say that the first time you invest with somebody, they'll give you, let's say they give you 40K, they give you 50K. But the second time they want to invest with you, the odds are, like, it's more than, the likelihood is very high that they at least double it on their next investment with you, because you've built that trust with them. So most people go, I'll get my feet wet and see what this is like. But a lot of people have, because they'll do that, if they trust you, they like you, and they've got a proven track record with you, they'll at least double their investment with you next time. So just thinking of that and how you guys can phrase that. So choose your platform wisely, whether that's Instagram, YouTube, Twitter, LinkedIn, a podcast. Facebook groups are huge. I absolutely love Facebook groups. You can do this, and like, here's the thing. You don't have to be a crazy educator. You just have to give updates and value. There is a saying that I love, and I say it all the time. It's what's ordinary to you is extraordinary to somebody else. So you just got to think about it. What's ordinary to you is extraordinary to somebody else. So if you guys are in some sort of Facebook group, you got a Facebook group for like, and you can name it whatever you want, but you can invite people that are interested in investing. Then you're sharing your deals, sharing your updates, giving like a video once every couple of weeks, once a month, once a week. And you're saying, hey, this is what we did this week to push the needle across. Or like you're doing a live in your house and you're inviting people to it. The more you can do stuff like that, free groups are really good for cultivating trust, cultivating a relationship with people, and then becoming a really strong authority on whatever your topic is. So podcasting, Facebook groups, strong, really, really awesome. What do we got here? Okay, and so scaling with AI is important. So we talked about this. This is why I would use ChatGPT for a lot of these things. You can definitely automate your follow-up process. So because I have put my avatar into a file, uploaded that to ChatGPT, that will be the best trained bot on it's way better copy than I could come up with. And then I give it a prompt, right? So like if I go over here, you'll see Fund Founders. I've got StoryBrand email sequences. I love Donald Miller's StoryBrand. So I just say, hey, build out a StoryBrand email sequence based on my avatar. And it's going to give me my emails. Sure, here you go. Here's email 1, email 2, email 3. And then here's email 4, email 5. And like, here's how you should tag people and the way it should go through there. And so for you guys, as you meet with somebody, right, you have a system that they go in, whether that's MailChimp or whatever, you can have AI build out what that follow-up sequence looks like for you. Hey, I want a 6-month nurture. I want a 4-month nurture campaign that helps me to stay top of mind and gives value. I'm not saying you have to have all these deals that you do, but you can go, hey, create a value-based email about educating them on self-directed IRAs. It'll just do it. And then based on because you've uploaded what your life is like one, you've uploaded a 51-minute script of how you talk. It gets your tone. It gets your understanding. It gets like the nuances and the words that you use. So then it contextualizes your emails to match that. And then you have a 41-page target avatar thing that it also put together for you. It takes how you talk, your life experiences, the things that you know, because like you probably have similarities with your investors. And then it takes your investors, the demographics about them, their complete avatar. It puts those together and it creates your whole email campaign. And it's fantastic. All you do is plug and play at that point. It knows everything about you, everything about them, puts it together, and then creates an email like you that they would like. It's crazy. So you could use it to really like elevate your copy, elevate your outreach, elevate even scripts, right? So that you could create a whole podcast and say, hey, create a podcast about this or a YouTube video about this, and it will write the script for you in a way that's attractive to these people and in a way that you do you, because it knows both very, very well. So you want to train it as much as you can, and I gave you 2 ways to train it very well. You can unlock AI-powered content, so you can see a lot of the content that I do. And then you can scale a small team. You really can. If it's creating my emails, it's creating my email sequences. It writes all of my emails. When my investors email me, it's really funny. When my investors email me, I have a whole entire folder. This is look, guys. I'm actually gonna show you this. This is really cool. So this is PF Capital. This is all of my docs. This is our balance sheets, our profit and loss statements, outstanding loans, cap rate analysis, our private money that we have, our fund docs, right? Our PPM, everything. So then if somebody asks me a question, it knows it better. It knows my contracts better than me. So then I can just respond to my investors based off of that. And it will respond for me based off of that, because I've uploaded all of these, our financial analysis, everything in here. So it's very, very cool because it will go back and you can see I've used it. I use it for legal counsel, investor updates. Now respond to this email. See, look, now respond to this email. Hey, somebody sent me this and say, hey, I hope you guys are awesome and crushing it in the biz. So then I had it respond to that email. So Facebook ad strategy, it's everything. I use it for everything. I'm replacing. So I actually was listening to a podcast today, and it was like, don't treat it like a tool. Treat it like an employee, somebody that can do what you would pay somebody 30 grand to do. Use them that way, because that's what it's for, and that's what it will do. Okay, let me see. Yeah, I hope, I hope this has been very helpful for you guys. If this was helpful for you, like, I don't know, give me a thumbs up or some fire. I don't know. I'm just talking, and I really do hope. It's funny because I see people, we got up to 8 at one point. Now we're at 4. And so I'm like, okay, am I not? Do people not liking what I'm saying? Maybe not. I don't know. I feel like I'm giving some value, but I think so. So this has been, I hope this has like been really helpful. I think we're about an hour and 10 minutes in right now, because I started at 9 because I didn't know how many people were going to come in here. So we're about an hour and 10 minutes. One of the things that I want you all to think is like, I wanted this to be straight value. This is not a pitch fest for anything. This isn't a pitch fest for fund founders where we help people to launch and scale investment funds and we do all the paperwork for you. This is not what that is. We also have our raise room that I did talk about a little bit right here. We usually have it at like $127. I have it at $97 if you guys want to join, but I have a full vault of like step-by-step modules of everything that we do. Oh, fix the billing issue. But like Raise Smart, compliance, legal, road to your first. I have a whole lot of stuff in here for your road to your first million. If you guys want to join in here, I'd be happy for that. Our capital stack calculator pack. Okay, cool. This actually has the single private lender, structuring your investor offers, waterfall calculators, pref distribution calculators, all of that stuff in here. If you guys are interested in that, I'd love to have you guys in here. It's only $97 a month. So happy. How much is it normally to start a fund? Oh, great. Fantastic question. So I'll keep that. It is typically anywhere between, depending on the complexity of your fund. I'm gonna keep this right here and probably fix my billing issue. in just a minute. But you also get all of this stuff. You get resources, our Fund Foundations 101 if you want to learn anything about this. Yeah, let me get that. Yeah, it's $97 a month, just for clarity. But yeah, jump on in here. You can go to, oh, you know what? Okay, if you go to wearefundfounders.com, or I could just put it in the chat. Let me just put this in the chat. But if you go to wearefundfounders.com, you can go down here to the raise room. But I'm going to go ahead and put it right here in the chat for you guys. And so it's $97 a month. It's got a ton of stuff in there, and I am adding stuff every day. Even the stuff I actually like, it's really cool. My wife really helps out with this stuff. So like if you go in here, you can see that like we have all these notes, and every single module that some of these we're still building out, but every single module has resources in here for you guys to like download and work on and do. It's really cool. Okay, now, second, let me go ahead and go into Q&A. Let's freaking go. Okay, how much does it cost to start a fund? It depends on the complexity of your fund, right? So, and it depends on what you want. So we talked to a couple people today recently. It can cost anywhere between, depending on, so I always tell people, if you don't have the information beforehand and you just go to an SEC attorney, it will be the most expensive teaching session you ever have, because it can end up costing you anywhere between I would say honestly, your average docs for a fund are going to be between $25,000 and $60,000, just for the docs. So your PPM, and there's three types. There's your PPM, of course, and there's your operating agreement, and then your subscription agreement, or your AO, which is your investor agreement, operating agreement, investor agreement. So you have your subscription agreement. So you have those three documents. Those are going to cost you anywhere between, and let's just say 15 to 60K, depending on like one, what you already know going into it. If you want to be a 506B or a 506C, if you know that what your waterfall structure is going to be like, if you ask for help on a lot of those things, it's going to be more expensive because they're going to educate you and they're going to charge you for every hour of it. And yeah, that's the average. You know what? Let's do this right here. ChatGPT, boom. How much are the attorney fees and docs for starting a Reg D fund? Let's see what it says here. Searching the web, blah, blah, blah. Okay, typically 12 to 30. Sweet. So that's not too far off, right? I said 15 to 50 to 60. I would say this is an article that is not 100% correct. I would say on average, I mean, I've seen 50. I've definitely seen 50. So you're going to be up there, just depending on what type of fund, though. Other funds are easier to start depending on the type of fund that you have. It all depends on the complexity of your fund at the end of the day. PPM, your operating agreement, and then your subscription agreement. That's what we have. We have an operating agreement, subscription agreement, private placement memorandum is your PPM. And then depending on the type of fund, you might have a deal disclosure if you're doing like a customizable fund. It just kind of really depends. But you have like Blue Sky filings, as you can see. There's all different types of things that you have. Accredited investor verification. It just really depends. Your Form D, all that stuff. All right. How can you fund a project with you? Okay. You might be talking about JVing. It just depends, right? So like if you want to JV on a project, that's something that we definitely can do, right? We bring the capital, you be the operator, or you bring the deal. And then it just depends on what role you play. Now, if we're talking about a fund, there are three major roles that you have in a fund. You have a fund manager, you have a capital raiser, and then you have the deal finder or the operator. And so that's how I think if you want to think about a fund, or you want to think about any sort of like syndication or any sort of things that you're going to raise capital for, those are the type of people that you need in your deal. You need your fund manager, your deal finder, and your capital raiser. So, it just depends on what role you play in that. I don't know. So it's a good question. If you want to like expand on that, happy to answer that. You have 4 developments and you need to raise and start a fund. Cool. And one of the things that you can also do too, cool. Just wanted to see. So this is also really good to think about too. If you are doing those individually for each development, and that depends on how big it is. Is it I don't know if it's like It could be like a small subdivision, or if you're or a larger subdivision, or you're doing like 4 small subdivisions. Something that if it's like 4 small subdivisions, could be better to start a fund. You spend about 6 to 7 months or whatever raising capital for that fund, and then you do this. Or here's what you could also do. So let's say you know somebody. You could bring the deal. Okay, so let's say you know somebody, and they have a fund, and this is a really popular okay, cool. 20 single family homes. I don't know, what is that like? Probably, I guess depending on the price point of that, like anywhere between like 4 small subdivisions. Yeah, then I mean you're looking at like, I don't know, 6 to 8 million on something like that. That can definitely be something that you could raise capital for, because ultimately too, even that 6 to 8 million, you don't have to raise all of that. You can leverage. So depending on if you have prior experience or whoever you're partnering with, you really only need to bring like 800,000 to $1 million, or something like that. So a fund could be really good. A syndication could be really good. Like it's not a single asset, but it's a single, 4 developments. 4 project, single asset syndication. That shouldn't be too difficult. You should be able to raise for something like that. That still would require you though to start essentially like syndication documents, which is a fund. But that's pretty simple to do. So those docs, depending on how you do it. Now, of course, like at Fund Founders, that's kind of what we do. We have what we do, and this is not a pitch for it, but we have outside. This is not Raise Room at all. This is Fund Founders. So we've got a whole other community of other fund managers that are raising 10, 20, 40, 50 million for their projects. Everybody goes in there, and some people, what's really cool is there's some people in there that have fund of funds. So they've started a fund to invest into other funds that fit a certain thesis. So some people have a lending fund of funds, and some people have, and so what they'll do is they'll go raise capital from their people, and they'll say, hey, I'll give you 8% pref. And then they come to you and they say, hey, we'll lend you this money at 12% because we're bringing $1 million or whatever, or you give us better terms than you give your other investors because we're coming in at a higher rate. And they can bring much more capital into your deal. So we've got people in there like that. They look for other deals that they could do, especially in like the Southeast or wherever you're doing your deal. And then also like we have weekly coaching in there. And then we also will do all of your fund docs for you. That makes it really easy too. So we have Fund Founders where we do that. Me and Seth, my attorney partner. And so I have that just in case. Where we at? It kind of differs. Typically they're Thursday at like 1 are the calls for the Raise Room. Last week I kind of got busy on the Thursday, so we did it on a Friday. It just kind of really depends. But yeah, we have those calls in here. This is Seth here. So you can see Seth comes in here, brings value. Which one's for you, 506B or 506C? So he taught this lesson right here. And then I did this pitch deck one last week. And this was a really cool one too, because I showed everybody how to do pitch decks. Also, how does the fund manager make money managing? Yo, this is a great question. So are you ready for this? So typically a fund manager will make money. And here's the thing that as you guys think through this, if you want to do funds and stuff like that, fund managers make money in 2 ways. And then there's not really an in-between. So you always want to make sure that you keep your day job or have some sort of active income coming in. So typically they make money on 2 parts: management fees. They make money on, you know what, too? Inside of, just so you know too, I'll show this real quick. Inside of here, so that if you want like a longer explanation of this, if you go in here, how to make money part 1, how to make money part 2. There's 30 minutes on how fund managers make money. There's 2 parts to that too, just so you know, but I digress. So back here, you can make money on your management fees. So let's say that you, and typically there's what's called like a 2 and 20 model. That's what like most funds do, where they go, all right, we're going to take 2% as a management fee. That's going to help us to pay our bills. And let's say you raise $1 million. So 2% of $1 million, I think is 20 grand. So like that helps you to pay your bills. That helps you to keep things going. That helps you to take care of those expenses. Where you make most of your money is on the profits that you split with the investors. So they call it a 2 and 20 because typically there is a 8%. All right, hold on. Let's really break this down. because like typically you have 80% goes to the your LPs, which is your investors. 20% goes to you. Since they bring the money, they get the majority of the returns on it. And so 80% goes to them, 20% goes to you, which ends up being pretty massive. Here is my pitch deck that we showed people. This is how we did it. Instead of doing a management fee, we did what's called a catch up, a performance fee. After they got their pref, we got a 2% catch up, and then we split 80-20 until they reach 20% IRR. Or you could do like 15%, 16%. And then what happens is it goes from 80-20 to 50-50, and you make significantly more money. Both of these are performance fees. You get your catch up. Hey, we've done our job getting you your 8%. Now we get paid. Investors love that, especially on your first fund. Now, second part of this is we've gotten you to a very above market. It's called alpha. We've generated enough alpha to get you above market returns. Now, since we've hit 15%, 16%, 20%, now we're splitting the profits 50-50 instead of 80-20. Here's how that like breaks down. So let's say the pref is 10% for your investors on this deal. That let's say your deal profits $200,000, $218,000, and they let you borrow 380. You borrow 380, profits 218. They get 38 if it's a 10% pref for round numbers. Your 2% catch up is $7,600. After that, you're splitting. If you're doing 20% IRR, you're splitting 80-20 to they get 24,000, you get another 6,000. But let's say you hit that hurdle. What happens from there is now there's still $142,000 left. You're splitting 71-71. So that's why you want to have some sort of another what's called hurdle down your waterfall. Because just like it sounds like, it's a waterfall. They're 10% pref. Then you get your 2%. That's another waterfall event. Boom, 80-20, hurdle at 80-20, down another level of a waterfall. So then now you've got, boom, this much, you're splitting 50-50. You make substantially more here. So you really make your money on the back end. And then, geez, don't even get me started. This is called carried interest. Now, Casey, I know you don't like Donald Trump, but Donald Trump did something really good during his term for fund managers. What happens here is your investors, so fund managers and their investors, what happens is this is called carried interest. And instead of this getting taxed at a normal income tax level, which for a lot of people is 30 to 40%, 50%, this gets taxed at a capital gains level, which is only 20%. So I know you don't. So that means that you are saving 30% in taxes on the thing that you get paid the most in, right? So it incentivized. What he did was he said, hey, I want to incentivize people to invest into America, invest into American funds, invest into America. And for these fund managers that are investing into America and making money, we want to incentivize them to do that. So on the majority of the money they make in the fund, they get taxed at a much lower rate. So that's another huge incentive for fund managers. So yeah, I know you know. Okay, cool. Does anybody have any other questions? This is fantastic. If you guys want more, for real, all the information that I share, could possibly share, how you have access to it for $97 a month in here when it comes to raising capital specifically. There is some fund stuff in here, like some fund level calculators on distributions, waterfall. Like if you want to learn, okay, how should I structure it? How much would people make? Great calculator here. If you want to go in and go, all right, how do I raise capital compliantly? What is the SEC? Why does it matter? What is the security? All of that stuff is in here. And then of course your road to your first million is in here. This is what we're talking about, building out the funnels, reaching people on social media, creating your pitch decks. All of that stuff is in here. Would love for you guys to join us in there. That would be awesome. But ultimately, I appreciate you being here tonight. I hope this has been so helpful for you. And if you guys need anything, please ask your questions. Let me know. I'll stick around for a second because I know there's a small delay, but I'm probably going to head out soon. Cool. No. All right. All right, y'all. Well, I appreciate you guys a ton, more than you know. Super thankful for you being here. I'm gonna do this like every Wednesday, just so you guys know. It's gonna be on different things. So I will, yeah. So I will see you guys next Wednesday. And hopefully I see you guys in the Raise room. That would be awesome. I appreciate you. I'm super thankful. Thanks so much. I appreciate you, Casey. Thanks so much for always coming in, engaged and excited. You can Instagram me. You can email me at devin@wearefunfounders.com. I think you did email me. You connected me with somebody. So yeah, you can just email me there, or you can hit me up on Instagram. Happy to connect with you guys. And yes, so thank you. I appreciate you being here. I hope you all have a fantastic night. Oh, and as I always like to say, to great success and greater impact. Peace.